Oh no. We came in hot and hard. Guys, mic check, mic check. 1 2 1 2. Let's get going over here, everyone. That was such a great opening. You know what I'm thinking of doing? Do you know what I'm thinking of doing? I'm thinking of actually of recording the first, I don't know, call it 5 7 minutes of the opening, playing that, and then jumping in with you live. And that way we could just get like a boom, crushing it at the open. Guys, we have a lot to talk about today. We're talking about fiscal dominance changes everything for Bitcoin. Right now, the world is looking at the potential of a global recession. We all know that Bitcoin has never had to face a recession, right? The only recession on the books of Bitcoin since Bitcoin inception was that brief period in April of 2020, technical recession. But we know that Jay Powell was printing the money, and Bitcoin, the bull of all bulls, excels in that particular regime. Right now, we're looking at the 10-year blowing out on the upside. A lot of people are very concerned about what happens next. Right now, we're seeing the price of oil maintaining above $100 a barrel. Polymarket right now places a 4% chance that by the end of July, that flows return to normal. Return to normal would be over a 7-day period, averaging 60 ships passing through the strait a day. By July, those is that free money? What does that return? About $75 for every, or it's say $37 for every $1,000 you put up. 4% chance of collecting, 96% chance of getting. Pretty good odds. I can't imagine a situation where over the next 10 days, the next 7 days average 60 ships. I could imagine a situation where the Trump is forced to call his own bluff. He's been bluffing so much, he has no choice to come in a little bit hot and hard, and then the price of oil sends. I could imagine that. Hard to imagine a situation. By July, those same odds of the straight opening and returning to normal are below 50%. They're currently at 46%. Now we're seeing headlines that NATO, if they're not have not returned to normal by July, will at that point come in and I don't know what you call it. I don't know what NATO expects to do versus the Iranians in the Strait, but they're saying that they would be a joint force, show of force, I'll say. What happens if by July we have not seen those flows return to normal? Does that put the world in a global recession? I don't know if the US would be in a recession, but a global recession. And I would say that there's a significant, the market's starting to get worried about that. I think right now the market is more worried about the price of oil and the ramifications that it has as far as the inflationary pressures, more so than whether or not we're seeing continued growth come out of the hyperscalers led by the AI build out. I think the concern here is, wait a second, we're about to see a lot of pressure put on the consumer in the US, whether it's mortgage payments, whether or not it's new loans, whether or not it's new car loans. We have the 10-year breaking out to the upside. You all know in the past that I thought that this would break out to the upside and it would be violent and go a lot farther than people expected. Well, I never expected the cause of it would be that 20% of the global supply of oil was being choked off. So I'm going to say I got that wrong. Even if it plays out like I didn't, the reason for that triggering was not what I had in mind. And you know, where does that leave me now and what happens next? Well, the 10-year is tracking as close as possible the price of oil. And it really matters what happens here. Could the US consumer, which by the way, Home Depot sales just came in once again, blockbuster. The consumer in the US is still holding on. You have to watch for when that falls out. That would be a sign of things are going to start to decline very, very quickly. It's not happening yet. Nvidia's earnings tomorrow, by the way. Big deal. Big deal what happens tomorrow in Nvidia. This is a Bitcoin centric call today, and the reason that I'm focusing out on things like the price of oil and 10-year is because there is a higher probability than since I can remember that we are headed towards a global recession. Bitcoin has never had the opportunity to perform in that environment, and you have to wonder what happens to Bitcoin in that environment. So before we get into that, I want to just go ahead and take a look at the NASDAQ. You all know that we spent a lot of time looking at the S&P 500 on this channel, which has broken out of a 100-year channel and has since then resumed out. So S&P 500 is looking quite bullish, and we're going to just pinpoint that in 1 second. But we're going to start this off with the NASDAQ. And what I wanted to do, which is now lost on me because I had it, there we go. Well, it's now lost me. I'll just go ahead and just restart it. And I just want to show you a couple of points, right? You could see this one over here. Maybe I should go off the top, right over here. And you could see that we found resistance in 94. Woof! Look at that. Look at that bubble. And then we tested that again during the great financial crisis. And it has been a mega bull market going on ever since the bottom of the great financial crisis, off the top of the resistance. I mean, just very clear structure. Is this clear as day of the structure that we're seeing here on the NASDAQ, which is why I'm going to bring it up to where we currently are. Look at that. It's just beautiful to see these breakout, these retest, the confirmation of the structure all over the place. And then the most recent test over here, look at this beauty, right? So I have that the peak of the market, November 21. And why did the markets peak? I don't care what anyone told you. We got it right. It was that they were tightening. Monetary policy was going from uber loose to tightening, tapering off the QE. I'm laughing about what some of the people's opinions back then about what was going to happen. You can't anyway. And then you could see over here off of the most recent drawdown, a perfect test of it. Let's go ahead and look at two things. The first thing I want to look at is what I was going to bring that up one more notch to the most recent high, right? So I'm trying to first, that's a little above, that's a little below. So we'll call that the medium. We could look at it from a horizontal standpoint and say 26,200, right? And then we have, more importantly, the structure. All right. I'm just trying to get my bearings. This is too long. This is a 20% drawdown from the high, which is to take out that. Look how far we've come in the past 6 weeks. Ridiculous amount. Bear market on the index is a drawdown of 20%. For us to take out that last retest, we're talking about a drawdown greater than 20%. Now, yeah, I get it. If we're going to see a crash like the doomers have been talking about since forever, and we're going to crash down 95%, then 25% is early. But it seems pretty late to me. I'm going to go ahead and just check out a couple of more things. I don't like this line, so I'm going to, but I'm going to go, and you know what? I bet you that line would serve a lot of people very well. But that's probably a 40% into that line over there, 35% into that line. Like I said, I don't like it. It's going to go ahead and draw back over here and come back over here. And then I want to find one that I like, and I don't like this one either. I don't see the structure. So you know what, guys? That's because I'm looking in the wrong place. And the structure starts probably off of the bottom of the great financial crisis. And man, I'm at a loss. I don't know where it is, and I can't find it. So I'm gonna. That's not bad, but that's probably not it. Look at that inflection point. That's. I don't have it. I'm just having a moment of fun here. So pardon me for one moment, because I don't, I don't, I mean, that might be it. And I just want to see if that's it. And then let's see. I could see 3 touches into that line of support. So that might be it. That might be it. I mean, so I'm looking at the top of the resistance, the bottom of the support. That might be it. I mean, I think that's it, which is pretty cool. Um, and the takeaway here is 2 things. First of all, in this area, coming into that area, that sets up a real point of caution if we were able to get track hard. Good to see you in here, first of all. And second of all, let me check out what's going on here with, okay, Japanese yen. And so far, so good. Looks fine. And funny that on that massive fear, we came right down and struck the structure. Are we setting up for a low high over here? Are we about to see any type of unruly unwinding over here? Are we about to set up another yen funding crisis? I don't know. What's the dollar doing? Dollar continues to strengthen in this regime over here. Sooner than later, dollar's going to need to sell off pretty hard. Otherwise, this house of cards is coming down. Right now, market is saying, okay, you're going to have to come in, Fed, and raise the Fed funds. Otherwise, the 10 years are going to keep getting away. And what's Bitcoin going to do? This is all about today, about what Bitcoin is going to do in the face of a global recession. And I have to say that today, I expected that by this point in time, mid-May, that we would have saw ships sailing through the strait. And right now, there's a 4% chance by the end of the month that will happen, and less than a 50% chance by July. We make it to July, and the strait is not opened yet. And by the way, there's like a 96% chance that the Iranian regime could withstand whatever bombing campaigns are thrown at them. So it doesn't seem like that we're going to see the strait open anytime soon. And I don't know what the plan is. I'm not on the inside circle over here. I don't know if that is exactly what the current administration foresee and wants, and they want that energy redirected towards the Gulf, or if they want to apply pressure onto the Europeans and Chinese. I don't or if they just made some really poor choices. Tell my kids all the time, you got to make good decisions. You can't make poor choices. There are definite ramifications from poor choices. And what we're looking at is a stronger possibility that we're going to see a spike up in oil that's going to be sustained. If that happens, I would have to say the chances of a global recession are quite significant. And I would have to say that that could even spill over into the US. Is there still time to walk out of this unscathed with the dynamics that we're seeing? And the dynamics that we're seeing is liquidity based. The dynamics that we're seeing is continued massive spending, massive profits as well. This is not the dot-com bubble where valuations were just completely off the moon. This is actually real world money being bought. Remember, I was telling you that not a long time ago, 2024. I was like, guys, no, Nvidia's not topping. These guys are making serious money, billions, and not just billions, tens of billions, 20s of billions, 30s of billions of dollars a quarter. These guys are bringing in real money. It's a lot different than what we saw during pets.com. All right, let's keep going. Jumping it back over here, a point of worry. And I'm looking for what would be like a strong correction. And obviously taking out this area, the low over there, that's very far away. S&P 500, we have the break. This might be easier. We have the breakout, the retest, resumption. Going below there would probably be very bad. That's still a 12% correction. very difficult market to trade right now as a lot of uncertainty persists. If you go back in your YouTube feed and you look, it's very bearish. It is gloriously bearish, and it could be the top. But if you go back and you look at what happened over the last 3 years, on one of the greatest runs of all time, Warren Buffett's been in record cash the whole time, and your feed has been glorious bearish the whole time as well. Well, I remember coming out of the great financial crisis, and you know what? The next 12 years up until we met was up only in 2020. And if you look at your feed during that time, it would have been glorious bearish as well. So that's the wall of worry. We have to fight that human nature that the markets are crashing. Well, the markets are not crashing. Guys, we have a video put out. We have a video put out in March of this year, and that was max fear. Markets had corrected 30, not I don't know if the Nasdaq corrected 30%. I don't know that it didn't. But some of the hyperscalers did. 25%. Some of the hyperscalers were down 30%. Google only down 15% during that. And we put out a video. The markets are not crashing. Now, is this the top? Are the bears lurking? Do we have to watch out? What's going on? I want to come back to this chart first before I get to that one. S&P 500, we don't want to trade below there. We're getting very close. Off the top, by the way, 7%. We all know this particular period of time. When I say this particular period of time, I'm talking about midterm election year. I'm talking about between May and the end of September. It is known as a time of 10% on average drawdown, S&P 500. We know that as a new Fed chair takes the realms, he's often tested. Same thing, 10% correction. And what makes this time different potentially is that we just came off a correction. We came off 10% correction on the S&P 500, 15% on the Nasdaq, right ahead of that period. We know that whenever you see a move of this magnitude, that going forward next 3 months, on average, with a hit rate of 100% of the time, index is up 3.5%. Is this time different? With what? There's a lot different all the time. And one of those things right now, for sure, we're seeing yields blow out. We're seeing oil above 100. And we all know that higher oil prices lead towards demand destruction and is the setup for a recession. Is Trump right that once the situation's resolved, oil is going to drop like a rock and then henceforth yields with them? And then you would have a double liquidity grab? Or is he right? But unfortunately, he's dead wrong because the situation is not going to be resolved. That's what we're dealing with right now. And we'll talk about whether or not it even matters because of the situation that we are in. Fiscal dominance changes everything for Bitcoin. Right now, we know that Bitcoin here is stuck in between a bearish and bullish view. And what do I mean by that? I mean like 4-year cycle. A lot of people saying, okay, we still have one major leg down. We should bottom by the end of September into October. We could see probably like $55,000 Bitcoin is cheap. And if that happens, then we know that, well, the year after the midterm is usually extraordinarily bullish. By that time, we got the seasonalities really kicking in, not just for Bitcoin, for markets in general. And it's probably a great time to buy Bitcoin. And we'll say, well, you know what? We also said that a couple of months ago. We have a video with this Bitcoin CAGR, and we talked about when the 5-year CAGR is this low, that's usually an opportunity. Since then, Bitcoin's up 25% or so. Not bad. Could it go lower? Well, the bear case and the bull case are pretty much aligned. What is he talking about now? So, guys, is this the moment here where you have between here and here, between now and into the first quarter of February. By the way, the bear case, which I'm going to say the bear case, puts roughly by March Bitcoin at $80,000, right? Bitcoin, if you still have this next period of time to accumulate, is that something looking forward? What's the risk? Jordan, what happens? You're just talking about a global recession. Bitcoin's never, ever, ever been in a recession, and it's a risk asset. And it seems that it's going to get crushed in a bear. We're going to have calls for $20,000 Bitcoin if something like that were to happen. The bull case, by the way, is a little bit different. The bull case is something that says, well, we bottomed in February. You can see the capitulation wick right there on the chart. It's pretty clear. And if you fast forward and we look at that same place in March, it's not much different, right? We say $80,000 in the bad case. In the bear case, March puts you at 95,000. So which is the bull case, which is the bear case? If you're bullish on Bitcoin, this is actually the bear case, because the likelihood of you seeing $55,000 Bitcoin is pretty low, and more than likely during this period between now and March, you're going to be accumulating at higher prices, not lower prices. So I would say the bullish case for Bitcoin is actually bearish for you, and the bearish case for Bitcoin will actually be bullish, except that I don't know that you're going to get it. And he said, well, Jordan, right now the sky is falling. I mean, did you see the price of oil? It's not coming down. Doesn't look like it's coming down, and we're about to see, yields blow out, putting more pressure out on the consumer. How could this be any type of bull case for Bitcoin? And what happens if Nvidia comes out tomorrow? And well, I don't know. My opinion is that, well, it would be very, very concerning if Nvidia came out and they said, guys, you know what? OpenAI, Microsoft, Meta, Alphabet, they're pulling back on their spending. They do not want to buy any of our chips. They want to buy less of our chips, or they're going to come out with their greatest earnings ever, right? And then, guys, probably what happens over the next couple of years is that Nvidia's market share finally begins to be taken away. But the thing is, not that they'll be selling less, but like not that less chips worldwide will be being purchased. That continues to move up, but there'll be other people, other players that are actually wound up coming in and taking away some of their market share. That's not bearish for the space tech. That's bearish for Nvidia. Well, their PE is pretty acceptable. It's pretty low in this current situation. Check hard. Well, I don't know what y'all think of the SpaceX IPO. I'd prefer Anthropic. I'm not sure what I think about. Do I have the wrong chart? I don't know. I don't know what you all think about the SpaceX IPO, but it depends on when the unlock's coming, and I think Elon is allowing a lot of unlocks earlier. Most IPOs, you get the chance to buy back lower. I don't know. I don't know what my feelings are there right now. It seems like it's going to be very oversold. 1.75 trillion or $2 trillion market value. I don't know. But I do think it's going to give Elon the money he needs to go ahead and to build the solar array that he wants to power the data centers. I believe his purchase of Cursor, or his soon to be purchase of Cursor, winds up being something that helps XAI become a leading frontier model. And I believe once he has the energy behind it, I think that there's a good chance that Elon is gonna he's gonna do some Elon things. I do believe that. I just don't know if this is the best opportunity to get in, and especially if we're about to face a global recession, it could happen. It might happen. We're going to talk about Bitcoin and how Bitcoin is going to react if that happens. So first of all, I'm giving you the bull and bear case between now and the next year. And Jordan, that seems you're saying that it's almost a given that between the first quarter of next year that we're looking at Bitcoin between $80 and $95,000, like a mean. And what happens if we hit a recession and we start seeing Bitcoin not go from $55,000 Bitcoin's cheap, but significantly lower than people thought that it would? That's a good question that we should take a look at and try to determine what we believe is happening over here. I like this image over here of these Bitcoin halving cycles lined up, and we could look at what's the same, what's a lot different. Well, I can tell you one thing that's a lot different was the last cycle when we saw Bitcoin make its all-time high prior to the halving. That was different. That was really different. It's the first time that ever happened, right? So we're going to see a lot of price action like that. What's different this time so far, and it's too soon to say, is the drawdown since the all-time high is significantly less. And even if Bitcoin were to trade at 55,000, that would be different as well, because Bitcoin at that point would be trading. I mean, is that a poor choice? $55,000 Bitcoin is cheap, off 55%. No, Bitcoin, this is not correct. This is using a closing basis. Bitcoin's already off 55% on a, let me go ahead and just put that up over there and take a look. All right. Let's get our ducks in a row. 53%. If we were to see, I said 55,000 Bitcoin is cheap. I mean, even still, guys, that would be dramatically different. Could Bitcoin go lower? Why does Bitcoin have to stop at 55,000? Because deviations of past lines suggest that where it end. Why doesn't it go lower to something like $40,000? And of course it could. And even if it did, obviously that would still be a difference, not a dramatic difference for this cycle. Anyway, back to the show. Starship, Rocket Lab. Rocket Lab was something I had well on my radar. Oh, taking off. Guys, let's take a look at what's going on with Bitcoin in a recession. We have currently Ethereum, Cardano still holding open positions. And we saw that Strategy took a short position today, closing its long trade over here, entering on the short side, currently going against it 2%. Nvidia still holding. Tesla with a pending close long by the end of today, 3 hours from now, potentially confirmed. We saw IBIT stopping out, exiting. Sorry. Yeah, IBIT, correct. Sorry. And then we have FANG still holding plus 15%. TQQQ late holding right now minus 2.7. Cabby, I'm going to say, and I believe that Sailor likely has a long-term time preference. So we look at the past drawdown so far. I want to just point out one major difference of what's going on this cycle. This is probably the biggest difference. And in the beginning, when we looked at the spot ETF flows, we said, well, you know what? They seem to be very in line with price action. Bitcoin draws down, the flows draw out. Bitcoin prices go up, the flows go in. But now, 2 years later, we could say, well, that's not true. That's not true at all. We've seen ever since the tariff tantrum over here, the amount of money that went into Bitcoin was $20 billion. You could see that we are currently significantly higher as Bitcoin has entered a 53% drawdown from the all-time high. And guys, the people that are positioning themselves in the ETFs, it seems that they are here for a different reason. They're probably not here for the tech. They're probably not here because Bitcoin is permissionless. because it's unconfiscatable outside of a court order, throwing you in jail until you give up your keys, because it could defy a wrench attack if you're using multi uh, geographical location, multi-sig. Uh, guys, they're probably here for different reasons. And the main reason they're probably here has a lot to do with liquidity. And it's a debasement trade. And they're well aware of what's happening around them. So let's talk about. So I'm going to regress one more second over here because this is something that I need to know. I'm going to say that's late. That's not good. I like this one. Always looking for where I'm wrong, right? All right. Let me jump back in over here and let me come back. And I'm looking for one particular slide that I want to share with you that I don't see yet. So I'm going to find it. There we go. How about this one? So you've heard me talk about for the last couple of years that the next play of the Fed playbook was going to be stop quantitative tightening. Quantitative tightening. What is quantitative tightening? Quantitative tightening, running down the balance sheet. Yes, you can taper a Ponzi. You can do it, but only for so long. And then have to begin raising their balance sheet upwards, as well as they began lowering their rates. But the pace of the rate cuts has stopped. And even though the new Fed chair, Wash, was in favor of lowering rates and winding down the balance sheet, his next move might be forced to go ahead and raise rates. I don't know. He might be forced to do that. Or they might be, probably more likely, if we are entering into a global recession and a recession in the US, you might see panic cuts. Panic cuts probably have a greater chance if you believe the price of oil is about to hit a major breakout and be sustained over 120, 130, $150 a barrel. At that point, and panic cuts, everyone here knows panic cuts are as bullish as you get. Why? Because panic cuts are the setup to get rates down to the zero bound to go ahead and flood the system with QE, outright purchases of bonds. Wait a second. You said Wash is not a favor of that. Well, you all know, watch what they do, not what they say. Bessent, Treasury Secretary Bessent, said Yellen is reckless with all these new issuances on the short end. It's absolute. And then he's gone ahead and he has outpaced her, making her look like nothing at all. This chart over here illustrates from a liquidity standpoint what we've been talking about as far as where we are in cycle. And you can see there's a lot of similarities. So over here you have 2019, right? And you guys are all very good at finding patterns. And you can see, first of all, the 3 touches to the line, the one above it. Right over here is where the Fed was forced to stop the balance sheet runoff and to go ahead and start raising the balance sheet. Look at that, right? The exact same place, the exact same touch. Look at this over here, the breakout, the retest. It's currently where we are right now. We're retesting into it. What happens next? Are we about to see the unthinkable and a return to outright printing? What would cause that? That's something that we have to talk about and think about. We have over here James Lavish. And James Lavish bringing up a good thread, one that we want to talk about here this morning. And James did, by the way, I always thought, and I was wrong here, when we first started in late 2019 streaming together, I always thought that we and Eric Townsend from Macro Voices were the only ones who positioned as bearish as you could get late February into March, because everyone else out there was so bullish. And we turned, as we started selling not only commodity currencies versus Japanese yen and Swiss franc, and saying to you, this is not swing, hold them. They're going to go a lot further than you think. We also started selling the S&P futures. And until we turned out, and the turnout was from the time Powell started printing until mid-April. But it took about 2 weeks of trying to like buy on the long side, buy, and then say, okay, guys, it's up only. You're forbidden to sell. You're to short. This is up only. And then you heard all the macro guys. No, it's going to be an insolvency event. It always ends this way. It always ends with a retest of the lows. And then you see everything go bankrupt. And Warren Buffett was sitting on his pile of cash, waiting for the moment that there's blood in the streets. And when there were blood in the streets, he didn't do anything. And when Powell flooded the system, he didn't do anything. But James Lavish, I found out from Eric, was the one who told him about the situation that was happening in late February. And the reason I thought that Eric on Macro Voices was bearish, well, he was, but it was because of James Lavish and the interview he had with him. So follow those with the history of getting it right. And even though I didn't know he was there, he was there. And he's now pointing out, I could say that he's talked about rates over the last few years being elevated, continuing to be right around. I would say that there's, pretty good call. So listen to what he's talking about right now. As the 10-year Treasury yield explodes higher, pay close attention to what the new Fed chair, Wash, and other officials say in the coming days and weeks. Why? The 10-year is the benchmark for just about all consumer borrowing rates in the US, including credit cards, auto loans, mortgages. The Fed controls the overnight rate by voting on the Fed's fund target, but the 10-year is set by the bond market itself. Buyers and sellers voting on inflation, credit card, and treasury supply in real time. To keep consumer rates from following the 10-year, the Fed has one tool left in the kit. It could print money and buy the bonds themselves to force yields lower, yield curve control. And that's what drives excess money supply and the next leg of asset inflation. Their words and any fancy new acronyms will be your first clue, right? We went from organic balance sheet expansion to reserve balanced management, reserve balance management. It's the same exact thing. They're raising their balance sheet, calling it a different name. Right here, James is saying, watch out for what Wash says in the coming weeks and months, and to see if anything is this. I can't see a situation where they return to the printer. I don't see it. Outside of a crisis, why would they do that? I personally can't see a situation where I look at the cycle though, and I say, well, where we are in cycle, we're getting close to that point in time where they got to go ahead and run the printer. I don't see the setup though. It doesn't make sense. And now we're seeing, right? The aliens are, is it going to be an alien invasion? Are they going to have to print? Is it going to be I don't even know what the new virus they're calling out. And my wife told me, she's like, oh, I was like, no, I'm not even going to entertain a thought of it. I hope that's right. I don't know. I mean, look, I guess it's better to be informed about everything. Is it going to be that, yes, there's this massive energy shock. It's causing yields to blow out. It's going to demolish the consumer. If that happens, tax receipts are going down, deficits are climbing, spending's increasing. What could they do? They have no choice. I don't care if Wash was look, that's a better setup. Look, I didn't want to print. I wanted to reduce the balance sheet. I'm credible, but there's no choice. We got to come in. Could that happen? Well, I think there's a pretty strong. I would say over the aliens, over that this might be the setup. This is another view of that. just another view of what's taking place over here, and whether or not they're going to have to return to the printer. Guys, we are in a situation that Bitcoin has never been in before. We are in a situation where, and I'm telling you that the people that are investing in Bitcoin, they're looking for diversity. They're like, markets are so tightly correlated that people believe, yeah, this is a scarce asset. And whether or not they're returning to the printers anytime soon, like, I understand the math. And I know that as time goes by, you could only taper a Ponzi so long, and that the money, the underlying, is going to continue to be devalued. And people understand that, and they understand it better than the retail that have been, not you guys, but the retail that has been looking for alt season for the past 3 years, as we've seen a monumental shift into the character and the participants of Bitcoin and its early majority. I told you, retail is irrelevant. It doesn't even matter. And you could see there's a different participant here, and this participant is not 55% drawdown. Didn't scare them. It didn't scare them. They're here because they see the writing on the wall that the devaluation is going to continue, and they view Bitcoin as a liquidity play. We went through 2022 where they tightened. 2022, and guys, do you remember the famous tweet, October 16th? Looking at the macro, but Jordan, you're not a macro guy. Looking at the macro, 2022 rate shock, Bitcoin is not immune. Guys, they're telling us they're going to start tapering. Taper is tightening. Bitcoin, bear market. Right over here. Guys, I don't care if sentiment is the worst ever. Close your eyes. That's a breakout that is occurring. We had a breakout occur again. This is a major, major breakout. Retest, resumption, coming in for another test. Structurally, we're just testing the low, the low of the breakout. Breakout, the retest of the breakout structurally. That could not hold easily. And if that does not hold, yes, then we're still coming down in the red line area. That's the next test. That is a make or break it moment. Structurally, that looks like the last 2023 breakout. What are you talking about? How does that look like the breakout? Well, in that moment, you had, what's going on here? But you know how I know I was so off? Because I didn't have the high, and the lines didn't align. Right? Close enough. We'll take it for the stream. Breakout, retest, resumption, back down into the line and held. We could lose the current structure that we're here, the yellow line, come back in for a retest of the red and still hold, and that's still the breakout over here. Until it's invalidated, it's what's in play. And I get it. It looks a lot like past bear markets. Major leg down, consolidation, major leg down, consolidation, major leg down. Now I'm gonna just go ahead and test that theory. So major leg down, boom, consolidation, major leg down. Yeah, this one went on for a while. This one is not, it's not a flag. The flag is as long as the pole. It's a channel. It broke down. Yeah. Clarity's likely going to pass. Guys, I got to leave it here till tomorrow and then continue this conversation, because I didn't get into how Bitcoin's going to act in a global recession. I have got into it a lot, and what I'm getting at is here. No, Bitcoin is not only a risk asset. Bitcoin is also as you all know, and guys, I am going to raise my hand and say that I was literally, before it became a thing, where desks started naming it, and then like the macro heads started calling it. But I always referred to Bitcoin as the debasement trade, and I pushed back as hard as you can in 2021. Those who said that Bitcoin is a hedge against inflation, and I said no, it's not. It is a hedge against the debasement of the currency. That's stupid. Oh no, but now it's a debasement hedge and therefore a liquidity play. And if you believe that the new chairman is going to go ahead and he's going to wind down the balance sheet, well, if that's happening, watch out. That's bad news for Bitcoin. But if you believe that we're almost to the point in cycle where there's no choice but to keep the music playing and the volume needs to be turned up, well, then we're in an entirely different situation. Guys, thanks for being here today. On your way out, if you're new here, welcome. Subscribe to the channel. Join us. And everyone else, welcome back. Regardless if you're new here or an OG, go ahead, show some love, smash the like button on your way out. Everyone, have a beautiful day. God bless you. See you all back on the inside.